Hi guys, welcome to today's trade of the day. And for today's trade of the day, we'll be looking at the dollar yen. And as usual, we'll start off with a top-down approach, working down from the monthly to the weekly to the daily, and then looking for profitable trading strategies on the 4 hour. Now, today we chose the dollar yen because we see that there has been further dollar weakness that we're expecting, especially with uh, the whole US and the virus situation blowing out of control, and the US government not being able to seemingly stem the spread of this coronavirus, right? So could possibly add to further dollar weakness as the yen is still considered one of the stronger safe haven. But let's look at the technicals for now. So on a monthly, what we want to do is we want to look for long-term support, long-term resistance level. And graphically, we see that there is sort of a support level here, right? And we see price actually testing once, twice, and more recently in March, price actually spiked down and strongly rejected this level. So graphically, this is a strong support level. So let's call this the long-term support. And what we want to do is also confirm this with a Fibonacci ratio. So we take the retracement from the swing low to the swing high. We open up all the ratios. And we see that this long-term support falls nicely in line with the 50% retracement. So let's just keep that level there. Select the 50. And now that we have settled our long-term support, we want to look for a long-term resistance. Now, price actually reached a high back in May 2015, and ever since then, it's been making lower highs. So clearly, price is in a downward trend. If you take a trend line and connect the tops, this is roughly what we have. So in terms of long-term resistance, right, graphically, all I can see is that there's a long-term resistance here. Okay, let's just ignore this trend line for now. Just remember that price is in a descending trend. And we have a graphical long-term resistance at this level. Now we want to confirm this by means of Fibonacci ratios as well. So because price made a push down, tested this long-term support, and then went back up, and then it sort of moved sideways. If we want to see where this level really was with regards to the retracement, we take a retracement from the swing high to the swing low, and we see the price is actually quite close to the 50%, but closer to the 61.8. So for that, we'll just highlight the 61.8, and let's call this our long-term resistance. Now that we have our long-term resistance and long-term support level, let's go down to the weekly. Let me tidy this chart up for you guys. Okay, so price made a strong rejection above this long-term support and pushed up here, all the way here, this level, right? And then it came back down to this level here, right? Like we mentioned earlier, price is actually in a descending trend starting from 2015. Okay, so we tidy up the trend line nicely. It's okay to cut a bit of the wick, but not okay to cut the candle body. So price tested once, twice, came close, right? Came close again this area, and tested a third and fourth time. So the bias that we have on the weekly is actually because price already tested this descending trend line recently. The bias that we have is for price to make a push down once more to the long-term support. But what we want to do here on the weekly is to find weekly support and weekly resistance. Now, offhand resistance is easy to spot. We can just put a resistance level here. Right, this can be our weekly resistance. And I confirm this because the movement started from here. The downward trend started from here. We're going to focus on more recent price before I push up, and then it came down. So I'm going to do a retracement from this swing high all the way to the price spike here. Open up all Fibonacci ratios. And we see that the weekly resistance actually falls in line with the 78.6. What's interesting to note also is that the 61.8 price in April last week, price actually spiked and rejected that level as well. So let's just highlight these two levels, 61 and 78.6. Okay, for a weekly support, graphically, we see that there is sort of a support level here where price tested once, second time, third time. Price came all the way down to long-term support, rejected, and closed above this level. So this is also a good weekly support. So now we have this weekly support, weekly resistance. Let's go down to the daily. I will remove this descending trend line because it's too far away. I'll remove the long-term resistance as well because it's too far away as well. For the rest, I'll just tidy it up. Okay, so now what we want to do is we want to focus on this recent area because that's where price movement happens most recently. Okay, and we actually recall that this 61.8 that we found on the weekly, all right, we see that it falls nicely here. This was actually the spike, the strong rejection on the weekly. What we want to do on the daily is again to find the daily resistance and the daily support. Now, immediately we can call this our daily resistance. We can again confirm this with a retracement from this recent high all the way to this recent low, and we see that it falls in line not just with a key Fibonacci ratio of 61.8, but also falls in line with a Fibonacci ratio on the shorter term of 50%. So remember that on the weekly we have a bearish bias. We say that price is going to push down towards the long-term support, right? And what I think price will do now is actually push to the weekly support, react a bit, and then go down to the long-term support. Now, what we want to do is to find daily support. There are two ways of finding daily support. One is we take a retracement of this entire move to see how far price can come back down. The second is because we see this sort of a zigzag pattern. We want to see how far price can go to the next key level. So we start off with a zigzag. We take from the swing high to the low and back up again. And we see two key levels. The key level for extensions are usually 61.8 and the one time. So the 100% actually falls right on the weekly support. Now that we have a 61.8% which falls here, there's no graphical support, so we can call this our intermediate support. Right, it will be an intermediate support. So this intermediate support, what it means is that when price pushes down in line with our bias, it'll probably show a small reaction here before going lower to the weekly support. And then it'll show an even bigger bounce, and then it pushed down to our long-term support in line with our weekly bias. All right. So we can consider this weekly support also our daily support. And like I said, we still have to do the retracement. So let's take a retracement from swing low to the swing high. And we open up all ratios. And we see that the weekly support is quite close to the 61.8. Interesting to note is that our daily intermediate support falls in line with the 50% as well. So let's just highlight this 50%. Okay, now we have our daily resistance, daily support, weekly resistance, weekly support. Let's go down to the 4-hour. And let me tidy this chart up for you. Okay, so now we have all these levels, and we see that price is still sort of in a descending trend line, descending trend environment. Right, we can actually connect all this. What I'll actually do is, as long as price comes back to test this resistance level, it's a graphical resistance level. Okay, anywhere here, I will short down. I'll go for a short towards the weekly support or daily support, right? So this is what I'll do. When price is at a 108.50 level, I will short and I'll play down towards the weekly support, right? 106.387, this level here that we identified, this intermediate support, will be the first take profit. Now, when price reaches this level, I would actually close out 50 to 75% of my position and then move my stop loss to break even to protect my position, and then let the rest of the position run towards the final target at 104.63. All right. So once again, the daily resistance 109.38.1 will be my stop loss. My entry will be 108.50. First take profit at 106.38. Second take profit at 104.63. Should price reverse break above the descending trend line resistance and even above the daily resistance, this bearish idea is invalidated, and we'll flip it the other way around and play for price to push towards the weekly resistance. That's all I have for today's trade of the day. Hope it's been a good one for you guys. Thank you.